All right, welcome back everybody. My name is Julien Meyer and I am a managing director here at NorthStar Venture Partners, adding again to our video series for entrepreneurs. Today, specifically talking about exit planning, what it means and why entrepreneurs should be focused on it literally from day one. So first and foremost, we have to discuss what the goal of a startup is, or the goal of starting a company, really what the goal of any founder should be, right? The goal of any founder, any business leader, any entrepreneur is to provide shareholder return, whether that's you, the single shareholder, meaning you want to put more money in your pocket than when you started, or if you have actual investment partners. The goal is to get the company sold, acquired, or to take it public, if you are so lucky, if you can get to that scale. So really the key is planning for that exit, right? Hence the term exit planning. And this is such a crucial step and a crucial part of being an entrepreneur that so many of us skip. In fact, myself as a founder in my first two companies, and luckily the first one sold, but in my first two companies, I didn't do any exit planning. I had no idea. And I probably left a heck of a lot of money on the table because I didn't plan for my exit ahead of time. So if you're thinking about this, right, and you're saying, okay, well, how do I plan for this exit? What do I need to know to get my company acquired? It's actually pretty simple. It's all about reverse engineering. That's all exit planning is. Exit planning is about looking down the line, a year, 2 years, 3 years, 4 years, 5 years, depending on when you're starting this, what stage you're at with your company, how much money you're making, are you profitable, how much revenue you're making. But it's looking forward into the future and say, okay, who can potentially buy us? Who would buy us? Why would they buy us? Getting that information, that data, which you can get from something like PitchBook or Crunchbase, where you can search for recent acquisitions and transactions. And then creating, basically coming up with this plan, writing it down on paper, this plan that you can follow to meet goals that are gonna get you acquired, that's gonna get your company sold, because then you can use that reverse engineered exit plan to do what? Well, to do a couple things. You can use it as the basis for your sales strategy. You can use it as the basis for your marketing strategy. In fact, you can use it as the basis for your business plan. Better yet, you can use it to bring to investors and say, hey, look, we have a plan to exit. We know that if we hit these metrics, we're gonna be able to sell for roughly X amount of dollars in X amount of years. So give us some money now because we need it to hit these metrics. And you look like such a sophisticated founder at that point. The investors are gonna love you, they're gonna eat that stuff up, and I'm telling you folks, if 1 to 2% of entrepreneurs do this, in general, I'd be surprised. And why is that number so low if it's so crucial? Well, number one, we don't really know about this. Entrepreneurship has no roadmap. Being a founder has no roadmap. Running a startup has no roadmap. We don't know what the hell we're doing. I used to make this joke when I would speak in universities and stuff in my last company, that 95% of the time, I don't know what the hell I'm doing. That's part of being an entrepreneur, is you're figuring it out, you're learning day by day, you're wearing every hat at the beginning, and you're trying to build a business. And on top of that, as you're building it, now you start to hire employees, you bring on investors, you go from trying to learn it to trying to manage it. You're putting out fires all day long. So who in their right mind has time to plan ahead for an exit 3-5 years down the line when I don't even have enough cash to make payroll this week? Right, that's the thought process. And that's how I used to be too. But that's a terrible, terrible thought process. And I didn't realize this until I made the jump to the finance side of things. But how crucial these exit plans are. How crucial it is to start thinking about your acquisition as early as possible. Because that's the whole goal of the game. And if you don't know how to win, if you don't have the instructions to the game, how on earth can you play it? Right? And so exit planning is really a crucial step for entrepreneurs to take as early on as they can in the process. It's actually the first thing that I really want to focus on in today's video, is that you want to start early when it comes to exit planning. You want to start as early as you possibly can. It doesn't matter if you don't have any revenue yet. It doesn't matter if you don't even have the product yet. Even if it's just the idea. Think as far ahead as you possibly can. And say, if I can get to this number in revenue in 5 years, if I can get to this profit margin in 5 years, who would potentially buy me? And start to craft that plan. Then go backwards. Say, okay, where would I need to be in 4 years then? Where would I need to be in 3 years? Where would I need to be in 2 years? Where would I need to be in 1 year? Where would I need to be in 6 months, 3 months, 1 month, 2 weeks? And all of a sudden, you have this beautiful plan. Now you have to execute on it, and not everything is going to work. It's going to change. It's going to be a living, breathing document that you're going to have to edit and work on, but at least you have a plan for this exit. So that's number one, is start early. It's never too early to start on this exit planning. Number two, what exit planning does is it really helps you understand the numbers that you're going to have to hit along the way. Right? And understanding the numbers, as I've said in previous videos, is huge when it comes to interfacing with investors or with anybody in the finance side of things, whether they're going to buy your company, whether they're going to invest in your company. If you as the founder know your numbers, and trust me, most founders don't. Most founders don't even know how to run a profit and loss sheet in their QuickBooks, let alone know what they're looking for when they're analyzing it. Right? If you know your numbers, you're always in a much better position when it comes to the negotiating side of things. And so what exit planning does for you, especially if you're hiring a professional, if you're hiring a firm like ours, we're saying, hey, we want to get our exit planning done now, you get a valuation. In any exit planning package that you get from a professional, you get a valuation of your company. So you know your worth, you have an understanding as to right now what the company's worth, and so you know your options. Information is power, and knowing what you're worth, knowing what your company is worth today, knowing what your company could be worth if you do a few things, gives you opportunities to explore options that you may not have known are available to you. Right? And so a big piece of that as well, and this is kind of the next point that I want to touch on my loose points for this video, is that sometimes we hear when we deal with founders, especially with the level of M&A work that we've been doing a lot more mergers and acquisitions for earlier stage tech companies, a lot of them are obsessed with this whole concept of, we want to be worth $100 million. We want to be worth $500 million. We want to be worth $1 billion. We think this is a $10 billion idea. Fine, great, cool. That's fine. You could do that for the next 5 years, next 10 years. You could do it for life. You could try and build that business to $1 billion valuation. You can try and IPO it. Best of luck. But statistically speaking, we know that that is extremely difficult to get to. Any of those valuations, 100 million is an incredible mark to get to. 500 million, unbelievably difficult to get to that level. IPO, it's a tiny, tiny, tiny little minority of all the companies that are starting in this country alone each year that will ever make it to IPO. Right? And so we kind of have this motto, this saying that we use with our clients, that sometimes earlier can be better when it comes to exiting your company. Sure, the exit might only be $10 million, but guess what? Hold on a second, let's explore that. First of all, only $10 million. You're selling a company for $10 million. That's already a huge milestone. Second, a big, big, big piece that people don't understand about mergers and acquisitions, and I didn't understand this when I was just a founder and I wasn't privy to the finance side of things. Oftentimes, there's little, sometimes no cash that's handed over in these acquisitions. Sometimes you're just getting stock. In fact, most of the time you're getting some little cash payment and then stock on top of that with earnouts based on different metrics that your company might have to hit once it's acquired. And so what that means is that if you're a founder and you're trying to get rich off this, you're trying to put money in your pocket, you're trying to get that success, you're a serial entrepreneur where you want to put money in the bank and go on to the next idea, sometimes, believe it or not, selling earlier can be much, much better. Getting your company acquired, exiting earlier, can come with an all-cash price. So potentially, instead of waiting 10 years for your company to be worth $100 million and then getting 4% of that sale price and 80% of that 4% is locked up in stock, well, I mean, why not just take an 80% chunk of what you own right now, sell your company for $10 million, all cash, and get that $8 million in your pocket? Right? You have to factor in all the math, the opportunity cost of how many years it's going to take you to get that $100 million exit and what it's going to come with. And so we always tell our clients that sometimes earlier is better, and that's why you want to start this exit planning as soon as you possibly can. And again, folks, I'm not talking about anything complex or crazy, right? If you want it done the professional way, if you want it done our way, where we go through an entire process and we walk you through the whole exit planning strategy, your valuations, all that kind of stuff, sure. There's firms like ours that can help you do it, and we're happy to help you do it. And we have a certain level of expertise, and we've done this enough times that we know how to do these exit plans really in depth. But on the most granular, basic level, this is something you can do on your own as an entrepreneur right now. You can do it in the next hour. right? A very basic exit plan. I'm not talking about the one that you're going to want to present to the board or the one that's the end-all, know-all, be-all of here's definitely how we're going to exit our company. But I'm talking about just very simply going through and saying, okay, who's in our space? Who just got bought recently? How much were they bought for? What do we need to do to mimic or copy that model, or how can we innovate on that? And then who are we going to sell to? It's very simple, right? That's what we're talking about, because it allows you to know your options. And like I said, sometimes, if not, more often than not, exiting a company earlier is better. So you have to know your options, and you have to start planning for this. So, again, I touched on this briefly, and this is my next point, is you always want to look for where the cash is, right? You want to look for where the cash is in your exits, because this is something that we're not taught as entrepreneurs either. Again, the finance community has done a phenomenal job of hiding so many things from us. And that's what we're trying to do with NorthStar with these videos, is to expose a little bit more about the mystery that goes on our side of the table now, on the finance side of things, whether it's the VC stuff that we do or the private equity stuff that we do or the M&A stuff that we do. We're just trying to bring some transparency and tell founders what's really going on here and explain to you all the different things that you should be aware of. And in this particular video with exit planning, right, to highlight this again is so crucial, because it's not really widely spoken about, but cash is still king. You want cash. You want cash when you exit a company, right? Sure, sometimes, okay, if Facebook is buying my company, it was 5 years ago, well, I wanted the Facebook stock. Okay, fine. But you still want a cash payout. You still want cash, because cash allows you to do things. Cash allows you to reinvest into your next company. Cash allows you to pay off all your debt. Cash allows you to buy a home. Cash allows you to move on with your life. Right? And we don't prioritize cash enough in startup land at all. In fact, for most companies, free cash flow, you ask a lot of founders, well, do you understand free cash flow? What is that? How are you guys paying attention to free cash flow at your company? They shrug their shoulders. Right? Cash is kind of like taboo to say in startup land today. But as founders, it should be our number one concern, especially for all you serial entrepreneurs out there. Cash allows you to build a bigger empire. Cash allows you to build more businesses. Cash allows you to start your next venture without being handcuffed and having to look for investors that you may not like or want to deal with. So when we're thinking about our exit planning, and again, this goes back to the point before, why sometimes earlier is better. You want to prioritize your exit plan in such a way that leads to the maximum amount of cash that you're getting when you're ready to sell that company. And reverse engineering that from day one, again, couldn't be more important. And this, in fact, is why so many really good entrepreneurs, the smart ones out there that get their company sold, will go ahead and contract with an M&A advisory firm like ours, because at the end of the day, what you want is someone to guide you through this process. You want someone to show you the way, hey, how am I gonna get as much cash as possible? How do I get as many bids as possible? How do I get the best possible price, right? These are the things you have to pay attention to. And even if you don't hire a firm like ours, even if you don't work with M&A advisors, even if you do this totally on your own, those should still be the things you're prioritizing. You should be focused on how much cash you're gonna get for this deal. How much are you gonna cash out? You should be focused on getting as many bids as possible. You want people fighting over your company when you're ready to exit it. And then you want to make sure that you're maximizing your price. You need to make sure that you know your numbers. Because without an accurate valuation, without somebody that can defend that valuation, without the materials to defend that price, the other side on an acquisition deal, unless you have an advisory firm, is almost always going to have a better team. No offense to anybody out there, but they're bigger. So they may not be better in the sense of talent, but they're going to be bigger, and they but they do have a bigger war chest. They're buying you, right? They have more cash to spend. So their whole goal is going to be to get you guys for the best possible price, and they'll be able to use certain tricks and do certain things because they have more money than you to spend on actually analyzing, getting the deal to go through. And that's the kind of stuff that you want to avoid, and that's why planning for this exit earlier on is always better. Because it allows your team, it allows your board, it allows all of your advisors, it allows everybody to get on board with what the exit plan is and move forward on those goals so that you get closer to that transaction every day. Because at the end of the day, folks, what's the point of starting a company if you're not going to make money on it? The whole game here is to get to acquisition. So anyway, that's our little spiel, our little video today on exit planning for entrepreneurs and why it's so important, a rough overview on what exit planning actually looks like and the things you should be focused on. Depending on if we get comments or requests, I'd be happy to go deeper on another video explaining kind of the whole exit planning process and what goes into that. And of course, if you want more information on anything that I chatted about in the video, if you want to work with us, if you just have a comment, if you want some help, you can always email us at the link below, info@northstarvp.com, or you can visit us online at www.northstarvp.com. We'll be happy to chat with you. So thanks for watching. Thanks for checking out another one of our videos, and I'll be back with here for another one soon.